Welcome to our special segment, Let's Talk Business. Our top story this evening is the RBI meeting, and expectations are that central bank will maintain status quo as far as rates are concerned. The outcome is expected tomorrow, and we have with us Pallavi Nahata with the details. Pallavi, what are you picking up?
India's Monetary Policy Committee is set to announce its decision on Friday. All economists polled by Bloomberg expect the MPC to continue to maintain a status quo on the benchmark repo rate that's currently at 6.5%. That does not mean it's going to be a boring policy. Let's have a look at what's changed since the last policy. Starting with inflation. Retail inflation has eased but remains elevated at 6.8% in August. It's expected to decline further in September, led by a steep correction in vegetable prices. According to Rahul Bajoria, chief economist at Barclays, inflation in the July-September quarter is likely to be a little over the 6.2% the RBI projects. Also, the impact of erratic southwest monsoons remains to be seen and could have some impact on inflation. What's also changed is crude oil prices. Since the last policy, that's averaged $89 per barrel, higher than $85 per barrel factored into the RBI's estimates. Now, while the impact on inflation is contingent on oil marketing companies passing costs to retailers, the impact on external sector is modest so far. What's also changed is tighter liquidity conditions despite the gradual unwinding of the incremental cash reserve ratio. Stay tuned to BQ Prime for our coverage of policy on Friday.
That was Pallavi giving us the highlights of what we can expect tomorrow. Do watch BQ Prime for a comprehensive coverage of the RBI policy. Moving on, let's take a look at how the markets have fared today. Markets snapped 2 days of losses to end higher. Sensex ended above 65,600 level, while Nifty reclaimed the 19,500 mark. Agam Vakil with a wrap of the market action.
Right, so a bout of short covering has led the indices higher in today's day of trade following strength we saw in global equity indices as well. As far as our own equity markets are concerned, we saw the Sensex and the Nifty snap a 2-day losing streak, and we also saw gains of nearly 0.6% both in the Sensex as well as the Nifty. In terms of some of the key sectoral movers, strength came through in the Nifty IT, Nifty Finance and the Nifty Realty indices, which kept the markets afloat. And on the losing end, we had some pressure in the Nifty Pharma and the Nifty Energy indices. In terms of the top gainers, among the stocks that kept the major benchmarks afloat were Titan, Bajaj Finserv, Infosys, HDFC Bank and TCS, and on the losing end, some pressure seen in Power Grid, Coal India, NTPC and Sun Pharma. Besides that, we also had a handful of quarterly updates coming in, on account of which we saw some stocks react to it. Negativity coming through in Marico on account of weak volumes outlook, and besides that, we had some buzzers on in PNB, RBL Bank and Bandhan Bank on account of quarterly updates too. On the whole, markets looking up.
Now, crude oil prices remain topsy-turvy after the recent run-up. The prices have seen over a 9% decline in the last 1 week. While the OPEC Plus decided to stick with supply cuts, US crude stockpile has seen a steady decline. But concerns over the cuts were offset by demand fears. Now, Mihika Barve joins in with the details analysis.
Brent crude prices climbed from $70 per barrel in June to an 11-month high of almost $98 per barrel last week. But prices have eased down to $85.57 per barrel, with Brent falling over 9% this week. And we now have two new updates that could be cues for future prices. We first had the Energy International Agency, which released its weekly status report on US crude oil stockpiles. The EI reported that the US stockpiles hit their lowest year-to-date level last week on robust export demand, whereas gasoline inventories rose higher than expected due to weak demand. Crude inventories fell by 2.2 million barrels in the week ended September 29th to 414.1 million barrels, whereas crude exports rose 9,44,000 barrels per day to nearly 5 million barrels per day. Additionally, crude stocks at Cushing, USA rose 1,32,000 barrels to 22.1 million barrels last week. Furthermore, the OPEC announced that it would make no changes to its oil output policy and will continue to maintain production cuts to keep supply tight amid concerns about a potential decline in the global economic growth. Consequently, Saudi Arabia will continue its 1 million barrels per day voluntary production cut till the end of 2023, and Russia will also keep its 3 lakh barrels per day export cap till the end of December.
Right, that was Mihika with the crude oil prices updates. Well, personal loans have been seeing a considerable uptick, but interestingly, this has coincided with a decline in household consumption. Where does the gap lie? Now, Avendus Sparks Ganesh Ram Jayaraman shares his insights.
I have never seen 28-30% unsecured personal loan growth, or most categories of retail loans growing, not on a low base, but on actually a pretty good base. It's growing reasonably high. With that base, what we should have not seen is the slowing down of household consumption across categories, which I mentioned. So where is the money going? Is it going into servicing debt? That's the question that we are asking. Is it also finding its way indirectly into markets through retail flows? That's another question that we don't have answers, but we are watching and we are trying to assess if that is indeed the case.
Now, BQ Prime spoke to XM Australia's Peter Maguire, who explains the volatility seen in the crude market. Listen in.
You've got to be considerate of, as far as the last 100 days, approximately what we've seen as far as crude. It's been electric to the upside. So that very, very strongly bid up. And as you mentioned, hit 95 odd. And I think that was off to the races, and everyone was saying 100 to 105 is very achievable. And that was by the end of September. It's had a washout since then, as far as some of that hot air has been taken out of the market. And when that, it's a point of evaporation. And any market that moves so aggressively to the upside, nearly to a point of being parabolic, needs a time to consolidate. And that's probably where we've seen that as far as profit taking. Some figures came out as far as revised forecasts moving forward for growth numbers, certainly for Asia Pacific and more importantly for China, from 4.8 to 4.4 by the World Bank. So they're just some of the little factors, as well as a raging US dollar. It's a pretty wild market at the moment, and volatility has been dynamic over the last quarter, and I think this quarter as well.
Now, the Cricket World Cup kicks off in India amid the fanfare. While billions will be rooting for India to lift the cup again, regardless of the result, the Indian economy will be more than $1.5 billion richer. Now, according to calculations, which sectors stand to benefit? Let's take a look. Saloni Doshi with the details.
The 2023 Cricket World Cup, which is expected to boost consumption in India by at least $1.6 billion, should bolster demand in 5 key sectors that are aviation, hospitality, food and beverage, media and advertising, and tourism. Companies operating in the aviation sector will stand to benefit due to the uptick in passenger traffic that will result in a spike in airfares. So you have airlines such as Indigo, SpiceJet and Air India that stand to gain, as well as GMR Airports Infra and Adani Enterprises that own and operate the airports, and Dreamfolk Services, which is an airport service providing company. Next, you have the hospitality sector. There have been reports of prices for bookings during high-stake matches surging 8 to 15 times the normal rates, and occupancy rates in hotels nearing 100%. The key players in this space include Indian Hotels, EIH, Chalet, ITC and Lemon Tree, among many others. Then there is a whole host of companies in the F&B space. Companies operating QSR chains such as Jubilant Foodworks and Devyani International, the food aggregators Swiggy and Zomato, and beverage companies like Varun Beverages, United Breweries and United Spirits will benefit. In the media and advertising sector, the biggest beneficiary is Disney Star, the official holder of the broadcast and digital media rights for the tournament, that stands to accumulate almost 4,000 crores in advertising sales over the course of the competition. The last big gainers from this event are tourism companies such as Easy Trip Planner, Yatra and Clear Trip, as travelers that come in to watch the matches often extend their stay.